Hi everyone, this is Michael Bengiat with Lifetime Investor, and this is the Market Trend Advisory weekend video for September 24th, 2022. As usual, before we start, here is our disclaimer. You can pause the video and read it. And let's go ahead and get right into the action. The market is really in poor shape, and nothing's really changed from last week. We are in a correction or a market in downtrend. We currently have no exposure to the market, either through the indexes, for the index ETFs, or through individual stocks. That's how poor it's been. The system's got us out quite a while ago, and then we've been avoiding all the selling that's been going on and the ongoing carnage that we've been seeing. We have no exposure. Market count is 0 out of 5. And we stopped counting institutional selling days once we go into a correction, so that's why you see a little dash there. And the power trend, of course, since we're not in an uptrend, it is off. In terms of our investing strategies, we've basically been just holding because we've been out of the market, down a little less than 10% on the QQQ, but the QQQ buy and hold is down almost 31%, so we're vastly outperforming that. And for the SPY, the SPY buy and hold's down 22.5%. We're down about 13.5%. So still beating the market. So here's a chart of the Nasdaq. You can see that we're coming down here. It looks like we're testing the lows. That lows, I think, was from June. I forget it was the 14th or 16th. I can't tell on this chart. I wouldn't be surprised to test it or even break it. But we did get what's called a pink rally day. We actually end up closing in the more than 50% of the closing of the range of the day, and you can see that also on the S&P. So that's a little bit of that's our sort of initial rally day. We're trying to see if we can get a follow-through day. It doesn't look likely, but we'll see what happens. We're just getting more and more institutional selling. There's been a lot of it, so you can just see institutions are bailing out at this point. They started bailing out up here. Well, they really started bailing out over here when it got near the 200. We didn't quite get to the 200-day moving average. That's right, there's this black line here before the sellers just came in, pushed it down. We had a couple of days that looked really strong, but just this was the day that Powell basically said, sorry, we don't have your back anymore. Beating inflation is more important than making Wall Street happy by keeping stock prices, keeping them high. So let's take a look at the S&P. You can see a little bit more. It did close a little bit above 50%. We didn't quite break below the June low, but we got pretty close. And of course, I think that's one of the problems with this market. There's just almost an unending supply of bottom fishers that just keep piling in. No matter what goes in the market, they just come back in and they think that's the bottom. We're going to buy. I think when this market's over, and I've mentioned this many times, it's not going to be over till nobody wants to buy stocks anymore. And then we're going to have an absolutely phenomenal time in the market for people that haven't been disgusted by it and have left. But that's how it works. That's how the market works. Now here's the Dow Jones. It did break the June lows, and very suspiciously, as I wrote in the notes on Friday, we closed 19.9% down off of the high. So we're like, it couldn't. Now at the bottom here, we actually were technically in a bear market, but no, they had to what they call paint the tape and rally it back up, so we didn't actually, so there's no headline that we're in a bear market again. I mean, it's stupid, but this is what happens. And for all the indexes, really, it was the last hour of the day that all this rally happened. So it just suspicious, it just doesn't really show a lot of strength coming in throughout the day. So this, even though we have a pink rally day, none of them are very strong. I would not be surprised to see new lows come next week. But anything can happen in the market. So it's just not looking very good. And basically what's happening now, the market's trying to price in all this new information about what the Fed's actually doing, interest rates going higher and higher, more than the market thought it was going to do. So that's what it's trying to do. What we don't know is how much of it's already priced in. I think that by seeing this last decline is that it wasn't what's actually happening now, and the level that interest rates are going up to was not priced in. And I also don't think that they're probably in the process too of pricing in what's going to be happening in terms of a recession. And we'll talk about that in just a little bit. So here's the technicals. You can see they were just weak the whole, even though we had a rally that went on over here, and then we finally collapsed. We had a little mini rally here. We really haven't seen any kind of strength. I mean, we're down to, again, 16, let's call it 17% of stocks above the 200-day. That's just really phenomenally poor, because the opposite of that is, more than 80% are below. So the market is just really just getting hit hard. And look at the 52-week lows. I think we had maybe one day here. We had one day that we had more 52-week highs and really just beat it by a tiny little bit. But we're just getting killed. So underneath the surface, really, and you can see the ratio, just, not even 0.1. Really, really poor. Down volume is just swamping up volume for the most part. The few times that it has was decent, but it just didn't last. So in terms of technicals, there's just no strength in the market. In terms of sentiment now, we actually are getting a little bit of much more fear coming in. We've come back down to extreme fear on the CNN. The VIX, we're just about getting up to 30 levels that usually have called some kind of a bottom. This has turned bearish. The investors' intelligence. There's a whole bunch of investors' intelligence reports. One of them, I think, is actually at the most bearish since 2008. So we are starting to get there. Put call. This is actually a day delayed. So this was just the previous day. I would not be surprised if this is even broke above this 1.14. Anything above 1.1 is usually calling for a bottom. But one thing you have to know about bear markets is that it's to get a true bottom in, two things will either. One is that it has to be extremely bearish, like what we saw in April of 2020, where this CNN fear greed was 1. I mean, there were a bunch of days where it was in single digits, and then it actually hit 1. It was just panic across the board. We might need to see that before this is all over, or some of the bottoms, especially like if you look back in history, some bottoms, the market just stopped going down, and there was no big massive plunge, and you'd think, okay, we're going to have a giant V bottom where everyone just capitulates and that's it. A lot of market bottoms don't end like that. They just stop going down. And if you look at a chart, you would never know that was the day. And I've showed this in other days, other videos going back, I think a few months ago. But maybe I'll bring back one for next week. And you can see, if you just looked at the chart, you would think it's just a little tiny correction, not the end of a correction like we saw in 2007 to 9. Or even the end of the 2000 to 2002 massive decline. So we're getting close on this, but I think it's going to have to get a little more bearish before we actually put in a bottom. I won't call it the bottom. Nobody knows where that's going to be. And given what's happening, that bottom may be quite a ways off. So one final thing I want to just talk about is it does look like we're going to be getting into a recession if we're not already in one. And, Fed Chief Powell has basically said that it's coming, but he hasn't, he really can't just say that. And he doesn't really know also. But it's from what he's been saying, just basically, we're warning you, we probably are not going to pull off a soft landing. It's probably not going to happen. And what's so far happening is that Wall Street's just really been reluctant. And up till just the last week or so, it had been pricing in either no recession. In other words, the Fed was going to just, cave, and they were even pricing in that there are going to be rate cuts in 2023. And that doesn't look likely. We still look like we're going to have at least another 75 basis point hike, as well as a 50 coming up in the next two meetings. So that whole scenario was not being priced in, or the Wall Street was looking at no recession. And one of the issues going forward too is earnings are just not coming down. It seems almost impossible that you're going to be going through this with all the warnings we've seen from various companies, and the earnings are just going to be stellar. It doesn't seem to be, working in reality. And here in this chart, you can just see whenever there's been any kind of recession, of course you get earnings pulling back, and we're just at, basically all-time highs. And that's going to come down. So this is probably going to put more pressure on the market and prices to come down as companies finally start saying, well, and the business is not very good. And with the recession and interest rates and, inflation and all that, everyone's pulling back from businesses, consumers, and, we're just not seeing what we thought. So that's probably the next leg that's going to drive the next leg down in the market. There really isn't a lot of positives at this point in the stock market. You don't have to be in the market. That's one of the things about being an individual investor, or even if you're a small, you're running a small fund or any kind of family office or something like that. You don't have to be in it, and you can be in cash. And our system has been pointing towards cash most of this year. So we really haven't been getting whacked over the head like many other people. And of course, in our other service to stock picks, we're just not, we don't bottom fish, and we've avoided much of the carnage that many people have been just trying to find the bottom in all these previous leaders. And, many of them are down 50%. Nobody thought that, Google could go down 50%. I think it's down 38%. Meta, or formerly Facebook's, down over 50%. Many of them are down 90%. So, and they don't show any signs of it letting up. So that's the one of the reasons we're using a system. It just gets you out when the time is to be out. So when this will turn around, nobody knows. Of course, you're going to be starting hearing about the Santa Claus rally that's going to happen, and there'll probably be another big bear market rally that's going to be rip-roaring. You'll see the Dow up 1,000 points and the NASDAQ up 600 points and all that. And probably it will end up failing, just as they do in bear markets. So at this point, we're just out when we're watching. And unfortunately, it does look like there will be a recession that will probably be worse than what people are expecting, but nobody really knows. So we don't really have good news this week, but the good news is that we're not in the market either. So we're just out watching, and we'll see what the next week brings. But I would expect more selling and probably break to new lows with all the indexes. So if that doesn't happen, that will be a positive surprise, and might point to some good news going forward. So it's all really about what is the market discounting, how much has it already discounted, and what is it sort of seeing going forward. And that will become more clear as the days and weeks go by. Okay, that's about it for this week. I will be back next week. Okay, thank you.